Welcome to the Investor Readiness Podcast, hosted by Eric Dobson and DeMario McIlwain.
Well, hello. Welcome to another episode of the Investor Readiness Podcast. I'm your host, DeMario McIlwain, and my sidekick right here is Mr.
Eric Dobson.
Thank you, sir. Eric, how's it going with you today, my friend? How's everything going in the distant land?
Good. This was one of those. They had a big, entrepreneurial summit and conference in Nashville this week. So that's kind of I've been immersed in the swimming with all the entrepreneurs for the last couple of days, listening to all their pitches. So it's been a fun week, but it's time to get back to work.
I hear you on that. Which is crazy because the wife and I are going to be in Nashville at the end of the month.
Oh,
for about 3-4 days.
It's a good time.
We're most definitely have to circle around and see where the happenings at. Seems like you might be the man to ask that question too.
See what I can do for you. Absolutely.
Well, hey, we've been having these talks rather successfully over the last couple of weeks, and to all of you who are listening and watching and things of this nature, we're ramping up. We're getting there, but we appreciate all the likes, views, and comments that you have been doing thus far. And don't forget to like, comment, subscribe, share, all of those things. This episode as well with your colleagues, friends, and family, because what we're here talking about is helping you get investor ready. But Eric, today, you kind of throw something on me. You say, hey, why don't we talk about business plans? And that sounds like an ancient word to me, business plan, honestly. I don't think we're living in the time frame where people actually, that's the first thing they think about when creating their business. Wouldn't you think so?
No, it's one of the last things I can I'm pretty sure I can provide evidence for that statement. No, it's, because a lot of the pundits say that, business plans are obsolete when you write them. They're no longer necessary. They're easily replaced with other things. I personally disagree. So
I wonder what they mean by replace with other things. Like, what can replace a business plan other than you just, going ham and just going hard to the wall, without even looking at any documentation? But what are the things that I would think that a business plan, in lieu of a business plan, that you can have in place?
And well, let's be honest. There's no replacement for just grit and grinding it out. But we get that. But what we've learned over time is that if you can't plan a business, you probably can't run a business. So a lot of people say the business model canvas, especially the lean canvas, is all you need. I kind of fervently refuse to accept that. I'm sorry. If you ever run a business plan is an easy thing to do. It's not that hard. So I don't understand the inertia against it, other than the fact that it's true. You write. We used to write back in the day. Oh, and I did this my first company. I remember doing this. I wrote, it was like a 50-page business plan, and we had it spiral bound and everything. And I mean, it read like like some kind of a medical journal article. I mean, it had references and everything. I was just proving that the business was viable. And I still think you have to do that, but not to that degree.
When you said 50 pages, the first thing I thought about was, am I going to go back and read it after I complete a 50-page business plan? Am I going to go back and say, yes, I said this, so now I need to do it this way? Because once you write it, I'm sure you have to dissect it, and then you have to put things into actionable steps and things of that nature. That seems a little overwhelming itself, I think. I think that might be the hindrance on why people may not do business plans.
There's no question. Absolutely. And we don't write 50-page tomes anymore. We write fairly light plans. I tell entrepreneurs at this point, I don't want to see any prose. Just give me some bullet points. I mean, there's no point. I agree that there is no point in writing some static document that you hand to an investor and then throw on the shelf when you get the capital. your business plan and your pro forma, and we talked about that before, but those are planning tools, okay? They should be in lockstep. If there's an assumption over here, it should be over here, and that way you can test your assumptions, especially when you go out to the market and start trying to, do your customer discovery and do your sales and marketing. Okay, this is a test bed. It's not some static document you just leave, just write for the purpose of getting funding and never revisit. I flatly refuse to think of it that way.
And you must have read my mind in that. I was going to say, I'm pretty sure that a lot of people write it just for the purpose of the next thing, getting funding. And I know I promised you I wouldn't ask a bunch of questions, but sometimes you say some things that I just have to come back around to. So with the business plan, do the investors actually read the business plans top to bottom, things of that nature, and then measure it towards how the business is actually operating? I think that's a great question.
Is it going to be the first thing I do? No. I don't want to see a business plan until we're deeper in the discussion, because you're right. It's if you do it right, it's a 10 to 12 page plan. To me, it's just bullet points, and it just outlines your strategies. It outlines your metrics and things like that. And it's a great source so that I can really understand if you understand how to build a business and scale a business. And that's really what I'm looking for. And again, making sure everything's matched up with your pro forma shows that you've got that full construct of how a business scales. But no, I'm not going to tell you that the first thing we do is, the joke is that it's lavatory material, so you can, I gotta go read a business plan. I'll be back. No, we usually, honestly, we start with pitch decks and things like that, so we can get a good, the whole process of raising capital is structured so that you start up here. So let's get a good mental construct of what your business looks like and how and how you conceive of it. Then we dig in a little further. Okay, now let's look at how you plan strategically to execute this. All right, now let's look at the financials. How those we get deeper and deeper and deeper into the business with every step, and that's meant to minimize activity effort on both parts. That's you're right. Anyway, you see what I'm saying.
Y'all heard it here first that, that business plan is important. You can't just put a bunch of words on a piece of paper and it doesn't align with your business, because at some point in time, someone's checking for you.
Yeah. But even if that's my diligence analyst, who I assign to read it and tell me if there's a problem, or more and more of what we're looking at is, AI tools for evaluating these things and pulling things out that specific things we're looking for, give me a summary of the marketing and sales plans, things like that. So again, it's not, now what's going to be fascinating one day is when we have AI writing business plans and AI reviewing business plans and see who wins.
You speaking my love language right there. I was already thinking in my head, like, hey, now, if you know how to tell AI about your business in a way that it can actually help you devise a business plan or give you some starter steps, that would be a thing. Now, which is the crazy part of it, just like what you were saying, if you use AI to create it and then AI is reviewing it, I wonder, is there going to be an argument going on between the two AIs? Because you, as the person standing on the outside, you probably wouldn't know exactly what's going on.
Yeah, you see ChatGPT sitting there going, "Didn't I write this?"
Yes, that's funny. That's funny.
No, that's going to happen one day.
It's probably already happening now. But I think, Eric, when I think about a business plan, it's because that I'm always coming from the small business owner side. And I think about it from the aspect of, what does a good business plan look like? That's usable for me, as well as for, when I'm going for investments and they say, let me see your business plan. And I hand over these documents and it doesn't just look like a bunch of jumbled stuff. What does a business plan actually look like? The real core scenarios.
Yeah. Table that for 1 second. Let's talk a little bit for just a second about why we think this is important. One of the challenges we have out here, this isn't Silicon Valley. It's never going to be Silicon Valley, and it's okay not to be Silicon Valley. we don't have the density of entrepreneurs, of capital, of deal flow, and things like that. Probably have disproportionately larger intellectual property, which is interesting. But one of the challenges out here is we as investors have to focus on building entrepreneurs as we help them build their business. And so part of this process in making them plan a business is that it's a fundamental exercise in becoming a successful entrepreneur, to be able to tactically, strategically plan and tactically execute a plan to build a business. So I mean, that's one of the real challenges. I will tell you that we insist on business plans. It's not an afterthought. It doesn't replace the business model canvas. And the other thing is, what we want to see, a couple things, and I'll get back to your core question in just a second, is we need to see that you've spent the same amount of energy on your business model that you've spent on your tech model. For instance, you're building a product, you're building something, and you had a plan. You started with a plan to build a product. You've built whatever it's become. Business is no different. And that's how you build credibility in the marketplace with not just investors, but employees, board members, possibly even clients and vendors. But having that deep understanding of how these things, how your tech functions, how your business functions, and how they function together is really pretty critical. So what do I say goes into a business plan? That's the first thing is, and I always tell entrepreneurs this. Once I need two sentences on what your product is. If you can't do it in 2 sentences, start over. Okay, I don't need a dissertation on your product. I need to understand what it is, and more importantly, what's the value of it. So, I always say start with your why, too. I mean, if you look at the Simon Sinek's and the stuff like this, people make emotional decisions and they use data to justify that. So I would say start with your why. This is why I get up in the morning. This is why I am going to, it's my first thought in the morning. It's my last thought at night, how to make this business successful. And then, you got to start with some of the compulsories. You remember the old, the Olympic trials from back in the days, you had compulsories. They got rid of those, but anyway. But you got to talk about your product and service, but in a succinct fashion. It's really more about the value that these things create, not necessarily themselves. I mean, there may be some uniqueness that you have to describe. There may be some technical advantage you need to describe. Great. Tell me why it's different. Tell me why you can protect it with intellectual property, for instance. But start with their product and service, and most entrepreneurs love to talk about that.
Yes, I often say that sounds like a paragraph. I'm still stuck on the part when you were saying do this in 2 sentences. I'm still at the top. When you said that, I was like, in 2 sentences. And then you issued out a challenge. You say if you can't do it, start over, basically.
Yeah.
Are we talking about some long sentences here?
Well, I always encourage people to come up with those pithy statements. This is the X of Y. This is the, ticket master of, hot dog sales, whatever. But the point being, if you can't boil your product down to something kind of pithy and kind of straightforward, I mean, you talk about, elevator, your elevator pitch. When you bump into somebody that you really need on your side, you want to be able to tell them in just a split second what you're doing, so they can say, all right, tell me more, or not interested. So that's anyway, that's pretty critical that you boil it down.
I got you. And watch this. I'm cheating, y'all. I'm actually taking notes too. Now I'm marking this off, but because now we created our little short 2-sentence statement. We're talking about our products and services. You heard it here. We can bulletize those type of things. But you know what, Eric? When I'm looking at my notes here, when we get down to the market, I'm starting to realize that can be sometimes suggestive as a statement when someone is talking about their market. You know, there's a broad market, then there's something smaller that may relate to my business or may not, but I try to make it work. So let's talk about what when you are looking at it from a market perspective, are you looking at, because you know, and I'm where I'm going with this, and I'm kind of traffic jamming in my own head is that I just created this thing. This thing doesn't exist yet, so therefore I have to kind of base my research on something similar or just based on the probability of the market that I can reach. But we're talking that number can be a difference of a couple of million,
Oh,
you know, far as in people's that scenario. So when you're thinking about market, what are you thinking about?
yeah. It's an excellent question. This is, people argue about, what's the, because what you'll see is entrepreneurs will come up with, this is a $6 billion market. And then you start to break down into market segments and you realize that it's really $100 million segment within a $6 billion thing. So, I mean, that's the challenge. And I guess that's part of the sophistication of doing a real market study is, okay, yeah, it is a $6 billion, total addressable market, but what can you really address at the end of the day, and how? You'll find market studies, you're going to find information all over the place about how big it is. I think the big thing that really convinces an investor is if you go ahead and dive into that, and this maybe sort of blends into marketing plan as well, but you start diving into who's your ideal customer, what do they eat for breakfast, what's their eye color. I mean, you really get down to that point where you demonstrate that you really understand your target client for the purpose of speaking to that client in a language they will understand and react to. Because again, this the sole purpose of marketing is to separate people from money. You're solving a problem for them. They should be happy to part with money to do this, but that is the sole purpose, is to identify a group of people you can talk directly to and part them with money.
I know everybody liked those words right there. He put that so nicely when he said, I'm talking to you to part you with money. I'm going to provide you a service or product in between, but the ultimate goal on my side is to build value and trust so you will give me your hard earned dollars
Mm-hmm.
for my thing.
Happily. Yes. You're excited about
No.
it. That's good marketing. It's funny. I teach at the University of Tennessee. I teach one class over there in entrepreneurship, and it's fascinating. Over the years, I've watched. If you have the discussion, you ask the class, who thinks capitalism is a bad word? Once upon a time, nobody would raise their hand. Nowadays, you'll get some meaningful percentage of the students will actually raise their hand and say, I think capitalism is a bad word. I'm like, okay, you realize we're a capitalist nation, right? this,
I was just
the
about to say
reason
that.
we sort of run the planet is from a I'm overstating that, but there's a reason we are the technical tech founders, tech leaders of the world, because we have that incentive. We've built that in the competition. We've built Darwinism into our economic model and survival of the fittest. And so I don't know how you can be successful without some element of capitalism and again, that's why we don't invest in not-for-profits.
That's
Hey,
a good point.
yeah.
That is a great point. Yes. Yeah. That was such a great point. You had me slow down on that one. Yes. Not for profits, nonprofits, yes. Because I actually get hit up a lot from nonprofits
Mhm.
who's looking to go through the Investor Readiness Program, and 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 although I truly believe that the program, the Investor Readiness Program, the online course, it actually can, you can go through it whoever you are, and there's some nuggets that you can pull out of there. But there are some organizations that ask me that question direct, because in turns they're looking to get in front of investors that I know right off gate, like, nah, this ain't gonna work. And I'm basically speaking to nonprofits. I know that
It isn't geared
that
that way.
is not how your nonprofit, the model works. You can't reach out to an investor for them to invest into your nonprofit. You have to take the donations or grants or however that scenario.
Absolutely.
But I
And
don't
that's a
think
different
there's no
process. Yeah, that's a different process than we're
yeah
talking here.
there's there's no investor agency out there that are actually I don't even know how you could do it, but there's no investment agency out there that works with nonprofits. I don't think is there.
Yeah, like you said, it's all grants and donations almost exclusively. Now, there are some not-for-profit companies that run a successful business. They just can't make profit doing it. They also can't issue shares. There's lots of things going on there, but there was a very successful company I dealt with back in the day. I think it was called Scientific Research Corporation or something like that. They were not for profit, and they existed on federal contracts and a whole bunch of different things very successfully, but they just couldn't be a profitable organization. And that's
That's
okay.
that's crazy. That's crazy. But hey, I'm going to take you on down the line because okay, now we done wrote out. Remember, 2 sentence statement. We got our bullet points about our products and services. We also done moved into our market. Understanding our market. Oh man, we give them some insight here that they can get in this course. But I ain't gonna say nothing, Eric. I'm gonna let you speak on it. I'm not gonna say nothing.
Yeah.
But but at the same time, so now where are we moving into next?
Usually it's a marketing plan. Once you have that information, you need to plan to exploit it. And again, I use words like part people with money and exploit because that's what you're doing. Let's not mince words. But again, you're doing it for the right reasons. If you're providing a great service with a lot of value to the right customer, they're happy to give you money and to accept that your product or service. So that's the marketing plan. How do you target and speak to your customers in a way they will accept, enjoy, and respond? And it's the whole goal of building your brand. I mean, Skilldora, great brand. Okay, investor, get investor ready. I think that's a great brand. Okay, so but the whole point is, it's got to say what you do, how you do it, and you got to speak directly to those customers who can't live without your product or service right now.
That's so crazy because and thank you for that shout out right there. Yeah, Skilldora. Go to myskilldora.com, connect with the Get Investor Readiness Program. Let's do it. But you know what? To your point there, even with Skilldora, we went backwards and forwards all the time trying to create that marketing plan that resonated with the people that we was trying to seek out. Especially in our world, we deal with online course products and things of that nature. And you look at your Coursera's and those maker companies that no longer even have to I don't even think they advertise that much no more. They just probably do some SEO campaigns. But finding those words has always been the hardest thing. And right when you think you have it, a couple of months later, you want to change it all up.
Yeah.
So that is crazy. I'm still going through that to this day. I'll read it myself, and because I have advanced in some things, I'm like, oh, we need to tweak it this way. And sometimes I don't know if we're tweaking it out of the concept of what the end goal was supposed to be, or we're tweaking it based on how we feel today. Do you see that a lot? Do people change up their stance?
Yeah, it's interesting. With the class I teach, we use a business simulation game, and I make them play against each other. So they break up into teams, and they actually try and create. It's a competitive process where they're actually creating a business, and you have to design your own marketing in this business simulation game. And students will get frustrated, and they'll say, "Well, so and so is doing this better than me," and I'm like, then go steal from so and so. Okay, as a mentor of mine said, was it always steal from the best? It costs you no more, and you get a better product. I mean, the point is learn. It's a constant learning process. There's constantly a tweak you could make to make it better, or make it zeroed in, or extend to a new market. I mean, segment. You may say that this is working well, and I want to expand over here. But yeah, it's a constant process with your marketing plan. But you got to start someplace, and that business plan should have a good solid statement of how you're going to talk to your customer, your beachhead strategy, what you're going to do to expand once you land and take territory, how you're going to expand into into the market.
This starting to sound very heavy already, Eric. I'm telling you, man. It's starting. I'll have to go back and check my documents. Everyone that knows me know that I have a file cabinet full of notebooks. And these are notebooks that I've been writing in since we started this business. I write down the concept, what we're doing, and I fill up the notebook and I always save it. But I'm going to be guilty here and be honest. Very few of those notebooks that I go back and pull out. And I probably said some good stuff last year, you know what I'm saying? But I once I write it down and I start working on it and I close that notebook, it's like I seldomly revisit. And that's what I'm thinking about some people's
There's a
business
series
plan.
of books that I've had over time that were my daily note taker books. I don't know that I've ever touched them. Once they go on the shelf, that's it. That's pretty much it.
They look nice, man. They look very nice. So that's the beautiful part. So now, okay, yeah. So now we're at the marketing plan. Okay, I'm with you. Um, next up, what we got? Sales plan.
Yeah, marketing prepares the field for the battle. Salespeople go out and win the battle. I mean, they're supposed to go out there, meet the customer where the customer is, understand the customer at that personal individual trust level, deliver products and services, and take money back, and then support them. So you've got to, a lot of people say VP sales and marketing, like it's one thing. Like, yeah, this is our VP sales and marketing. And those words are conflated. You're like, wait a minute, those are two completely separate and distinct responsibilities. They bear no relationship to each other, except one should come before the other. So help me out here. And so as soon as I hear VP sales and marketing, I know that you have neither. So I mean that's just anyway. So yeah, I need a sales plan. It's got to be separate and distinct from your marketing plan.
You see, I'm up here exploding, man. I'm up here exploding because sales and marketing. It always comes in that term. And I don't think I have heard marketing and sales, but I hear sales and marketing plan,
Correct.
in that particular order. And a lot of times we do intertwine both of those scenarios.
Mm-hmm.
When we're writing our marketing plan, we're thinking about how we're going to sell. And the symbiotic relationship between the two, it just seems like I'm doing some ad campaigns or whatever the case may be, and this is my marketing and sales plan. But what you're talking about here is actually saying that these two sections, especially when we're talking about the business plan, these are two separate sections and they should read differently. That's what I get that you're saying?
Absolutely. Hands down. And those are two different skill sets. They're not even, if you have one VP sales and marketing, those are completely different skill sets. And I would say there are very, very few people that could pull that off if you had to do both, because they're just different skill sets.
Well, I hope y'all taking notes here, because if you see me stutter stepping and stuttering in my conversation, it's simply because he's saying some things to me that I'm checking my own self. Like, did I do that? And if I did do it, did I do it correctly? That's the question. But this next one that's on my list here, Eric, now, this one right here, the cake, I'm just going to set it up because I hear this term 1,000 times. I have no competition.
Oh.
And ladies and gentlemen, what we're talking about is the competitive landscape, the competitors. But I hear it all the time. And and I think you know this, I come from the music world, I worked in recording studios a lot, producing a lot of music. And I can probably count that every artist that walked through the door says they was the next best thing. They're going to change the game, change the world, because there's no competitors out there. Nobody can compare. And business owners think the same way, because when they launch a new product, say we have no competitors. So, for instance, with that, and I want you to give your insight. We was talking about Skilldora. Skilldora actually launched as the first to introduce the AI avatar learnings and accreditation accredited courses into the e-learning market. At that moment in time, when I found out we was the first, I started off saying we have no competition. We're the only ones out here. It's noted we're first. But then as I deep dived into it a little bit more, well, every online course platform was our competition. We just had a differentiator, which was the AI avatars. I had to start looking at it differently. But I know you hear that a lot in your world.
Yeah, and I always tell people, especially my students, because we get that a lot, is no competition, and I respond, then you probably have no market. If it's attractive enough, if it's there are yes, none of us knew we needed an iPhone until Steve Jobs stood up and said, you can put all your videos on here, you can put all your email, your blah 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 blah. And of course, I thought he was insane the first time he said that. I'm like, the hell would I want that? And now I can't live without it. But so there are some truly out there ideas that no one knew they needed them until someone said, I'm making this, and look, okay. But those are extremely rare. So, and then of course he created a ton of competition for himself, and that's fine, that's normal. But if there's no competition, it either means there's not enough demand, or which means you got a massive educational hurdle. Now, Steve Jobs had the luxury of money. He had the luxury of hundreds of millions of dollars of marketing budget, or there's or it's not, may not be feasible. I mean, there's a reason no one else is going after this market if you say there's no competition. And so it begs the wrong questions. My first question is, explain to me why there's no competition. Because there's got to be a reason. So you're better off to say, and I've done this before when I was an entrepreneur, yes, we have competition, we're better than them, and it's and point to even some arguably indirect competitors, but point somebody else, give so you have that, at least there's a validation that there's a market, there's some market there for you to go take.
The first thing I started thinking about, and for everyone that's listening, some of you may already know that with the Investor Readiness Program, we actually do provide feedback on your pitch deck, which is a great thing because we have no competition out there. No one is providing you feedback. Okay, y'all can check me on that one. You see how I threw that in there? But at the same time, it was one. I'm not putting the company on blast. I won't say the name, but it was one particular company that one of your review points was do. I think the person that was submitting it was almost in a no competitive state. But one of your replies was, "Are you?" And I'm paraphrasing, but are you sure that the businesses that you say need this product actually want it or need it themselves?
Yeah.
I know, looking at it from their perspective, it's like, hey, I've been in this business X amount of years. I have this background. I have a career in this previously. Now I have my own business. Now I need to throw this out here to the market. There's nothing out here like this. And your response was, do the business or the people that you're selling it to, do they feel like they need it?
Yeah. Do they say the same thing? Yeah. That's what we call product market fit. Yeah. So if your customer says, if you say my value is X and your customer says your value is X, that's product market fit, and that's what every business is initially targeting. That's the first thing you have to prove, is that your customer wants your product and recognizes the same value that you want to sell them.
That's crazy. That's crazy. Well, ladies and gentlemen, I'm going down the list here, so y'all please forgive me because I have to sidestep every now and then when he says something that's so good that I want him to repeat it again. But Eric, you said on your list here. Now I really was clueless on this. Barriers to entry.
Yes. Every business faces barriers to entry, and that could be something as simple as just it could be an FDA, FDA regulatory approval is a huge barrier to entry. Okay, it's a big test. Seems like it has an almost, willy-nilly kind of decision process, which is not true, but sometimes it feels that way. But a barrier to it could be a patent. Someone else has a patent in your space. You either have to license that, or you have to figure out a way around that. And anything that you can do, anything that's going to cause you problems, or anything you can do to cause problems for your competition, to give yourself time to protected space, so you can grow and scale, build your brand, and build your customer base before people figure out how to get past those barriers to compete with you. So, if you're just a better mousetrap, good. Nothing wrong with better mousetraps, but you're probably not going to get venture investment. Investors don't invest in better mousetraps because you're competing on price and not value. And in this case, we're talking about how do you create value, and how do you protect that space for yourself long enough that you can establish yourself, grow your business to the point that you reach some kind of organic growth level, whatever you want to say, that gives you some staying power in the market.
You know what? I like that. But you said something there. I'm always pressing that rewind button. And it's kind of relevant today. There are, I was doing some research, and I might have told you this before. Somebody did a count. There's over 200,000 new AI companies out there right now.
I have no doubt.
And but the crazy thing is when you understand how the large language models work, as well as the avatar model, the back end, how it actually produces the thing, then you realize that a lot of these companies are better mouse traps than the previous one. You just said a key thing. You said investors don't invest in better mouse traps. But in this landscape, I'm realizing that a lot of these new businesses that are popping up now in this technology age, they are just simply better mouse traps than the thing before.
Processes, absolutely. And that is one of the biggest problems facing this AI boom, is that it's almost impossible to create barriers to entry as an AI company, because they can say, well, I got better training data. So, okay, but somebody can overcome that, and they don't have any regulatory or legal reason they can't do it. And so that's one of those real challenges and we've been looking at AI companies for, a decade. And of course it was called machine learning, and we called all sorts of different things over time, but it's artificially intelligent things, but so few of them, we found required AI, artificially intelligent algorithms, and very few of them created any kind of intellectual property or barrier.
Oh, no.
No, in fact, they're again. So, if you want to patent something now, it's very difficult, especially in the AI space, because how do you attribute intellectual property with an AI? It's very, very, very challenging for these companies.
Oh man, we have to do another whole episode where I put some of these companies on blast just because I'm petty like that sometimes, But
we could probably do a whole episode on AI in this business.
Yes, because in our world we get a lot of people use us for consulting on AI tools, and they like to ask about the latest thing. And then if I say I don't know about it, they look, well, I guess you're not that guy. No, the reason I don't know about it is simply because I can go in there for 2 seconds and already know that it's the new face of a new model of this company that's doing the same thing over here. Like, for instance, the AI avatar world. There are so many platforms out there now where you can create AI avatar video. But when you understand the core, you understand that they're coming from this one source, and API calls allowing you to manipulate the scenario and create you a whole nother business. And there's so many of them doing it now that every time I go onto a site to kind of investigate, like, oh, then I see the steps, because all of them follow the same format. Put this in, hit this, click here, and it produces this. I'm like, well, how are you making money, or we just really racing, competing against each other for just market share, just of a little bit? We don't plan to scale or whatever the case may be. So I'm always curious about what that looks like in the long term. Which this be before you say anything, because it segue right into the next thing on our list when we talk about sustainable competitive advantage.
Yes. The question is how sustainable, how competitively advantageous, and how sustainable. I mean, because obviously, shouldn't be that challenging to create some competitive advantage for your business. If you have trouble creating a competitive advantage, then you really don't have a business. So, first things first, it should be fairly easy to create some kind of advantage that you can exploit. The problem is, it's kind of hard to sustain that. As soon as people figure out that you're doing something interesting and new, they're going to try and figure out how to get around that. They're going to reverse engineer your products. They're going to, and I always tell everybody, if you tell yourself that your competitors want your customers more than you'll never be wrong. Okay, make sure So how sustainable is that advantage? And that's based on barriers to entry, and hopefully in the future sales relationships and things like that. But that's and again, with most of the startups, we need 2 years, probably need about 2 years worth of a protected space to get to the point that you've built your product, you've built your customer base, you've taken investment capital, and you're ready to start to scale. So you're trying to create, and that's a fairly reasonable thing. Someone say, yeah, well, we've got maybe a 24-month runway on anybody else that could do this because we spent 24 months researching it to get here. We see that kind of argument a lot. And again, patents, 17 years from, 20 years from filing now. I think that's the way it works. So even then, at some point, your patent's going to go open source. And then you're going to be swimming with all the other fishes and another can of beans on the shelf at that point. But how you initially create that value, how long you can maintain that exclusivity of your space is really critical. And again, we don't expect that you can do this forever. It's a question of how long, and does that give you the time to build the infrastructure, to compete based on again, more downward pricing pressure and things like that.
Since I am authorized to talk about myself and use my own self as a guinea pig because I can't talk about no other companies. But you said some key things in there, and I'm going to tell you, I understand that firsthand because you've heard me throughout this conversation talk about our claim to fame at Skilldora, which was the AI avatars at that moment in time, because no one else was doing that. And we didn't do it because we was trying, and that's a story for another day. But what I found out quickly is that even the company that we first licensed and manipulated the software to create these avatars with, they had an aha moment. It was like, wait a minute, y'all used it that way. Maybe we should open up. Now it was their software. They were like, maybe we should open up a whole nother side to where multiple people can do this thing, and they did. They used us as references. We was, their claim to fame for a long period of time because they was out of they were out of Tel Aviv. I had to think about it because we changed to a company that's out of London. And then next thing you know, another company in London did the same thing. And we're utilizing all these tools, but then the landscape became very crowded, so that those words are the first AI avatar, all instructor led program platform that became obsolete because anybody could do that now. So we had to pivot really quickly and started back focusing on our course topics and information versus how it was delivered, because how it was delivered got us a lot of publicity. But then after a while, that wasn't special no more. So when you're talking about sustainable competitive advantage, I know firsthand that we had probably about a 1-year run with that competitive advantage. Mm-hmm. After that, we had to now start focusing on things differently. So
we had to focus on content, which is a different form of intellectual property. Yeah.
Yes, sir. Yes, sir.
And unique content is exactly that. It's an advantage. The question is, how long can other people knock it off, reverse engineer it. It's just a constant process.
But moving on down our list, because it seems like I'm in the driver's seat, you laying back in the recliner on the passenger side with the window down, the wind blowing. So this is a great one here, Eric. Financial projections.
Yeah.
This is great. This
Well,
is where so many
if you'll
lives are
notice how we're
told.
sort of building this structure, it's, we're starting with, the why and the product, and then we're talking about the, who else is out there. And so you can see part of this is building the right story. And so eventually you've got to have, what's the payoff? What's the outcome, this whole story has to culminate in something that says, hey, we're creating value here. It's a business story. So, the financial projections are that they show you what's it going to cost and what are you going to get back, and when you're going to get that back. And that's really, really important information, especially for an investor. The first question I'm going to say is, okay, I loan you, I get one, no loan. I invest $1 million in your business. When do I get it back, and how many friends does it have when it comes back? That falls directly out of your financial projections. So you can say, yes, I'm going to, here's my cost of user acquisition. I'm going to take your $1 million. I'm going to dump that into my marketing plan. That's going to create X, users or clients, however you want to, whatever, phrase you want to use. And at so-and-so, rate of adoption and a so-and-so churn rate, I think I can get a lifetime value of, Y out of this. Therefore, I have a, $15 million top line business in 5 years that we should be able to sell for $75 million. Boom.
But you know what? Ooh,
Okay.
I got to throw this one out there. So when we're doing these financial plannings and we're especially when in investor communication, am I telling you how much I can get you back at what multiplier, whatever the case may be, or are you looking at my financial projections and telling me what you expect back?
Yeah, I want to hear
Does
it.
that make
Yeah,
sense?
yeah, it does. I mean, if you do your financial projections right, you should be able to project when and when the optimum time on that curve is as you're going up the curve, when the optimum time to exit is, roughly what the exit value should be, and then you can start to put that together with obviously who will acquire you, or is this an IPO opportunity? We blend directly from that financial projections into an exit strategy, exit plan, just like anything else. So we can go look up, and you should go look up, Google, or you pull out ChatGPT. Show me the top 5 acquisitions in my market in the last 5 years. Who
Hmm.
bought whom? What did they pay for them? What kind of exit multiples do you have on? In other words, what's the multiplier on top line revenue? And that becomes your next argument. Again, with the icing on the cake is, I can, if you give me money today, in 5 years, I can return it 5 times over. Okay. So, that's the number one question an investor is going to have is, when do I get my money back, and how many friends does it have when it comes back?
I like that one. I like that one. And I know we're getting close to our time, but I want to put a little parentheses out because when we're talking about we kind of went into the exit strategy and things of this nature, but there's always been one key, and I'm always thinking of the questions I get asked. It's my business valuation.
Mhm.
Because in order to determine, what this could possibly look like at exit, I need to have some type of valuation of my business. I need to know what am I worth. And we're talking about multipliers and things of this nature. Now, I've read that there's a trick you can do the top line revenue with a multiplier that's in your industry, and it kind of gives you a snapshot of a valuation. Another person that I was speaking with one time was saying the EBITDA, utilizing that as with a revenue multiplier. I mean, with a multiplier in your industry. It's like, no, you never do the revenue. So I, I've I come to realize that a lot of people don't even know where or how to get business evaluation. And
Yeah, and this,
trust and believe,
yeah,
there's some companies out there I know because some of my clients have paid y'all
Yeah,
gentlemen and women
you can wait
for
for that.
business valuation reports.
They're usually wrong.
But
Um, yeah.
yeah.
Here's it's for the early stage companies. Yeah, there's. I mean, obviously there's some databases that we can use and they can use if they can get their hands on them to look for comps. It's a lot like real estate. What are
Mm-hmm.
what are these? What's a company like this getting in other markets or other geographies? So you can look up some comps. That's one way to look at it. You can pay accounting firms to do accounting valuations, but quite frankly, they don't hold any water. And as much as I hate to say it, a company is worth what an investor will pay you for it now. And it really comes down to that. It's a negotiation. You can probably find some good information on roughly what a company should be worth. And then the question is, what kind of multipliers do you have? Do you have really groundbreaking intellectual property, or do you have someone on your team that has some unique network or some unique knowledge or experience? And so there's always things that sort of you can use to set a baseline and sort of add on to. Those things can also take away from if you don't have those things.
Mm.
But at the end of the day, as much as would love to tell you there's a more scientific method for it, and we can do some net present value work on your financial projections, and we do that. Especially if the valuation an entrepreneur is asking for is just preposterous. Usually we'll go through the math with them and say, okay, so at year 5, blah blah blah, we're going to net present value that back to today, and this is what this is the best you're going to get essentially at that point. But yeah, it's a challenge. I mean, everybody wants to know how to do that, and it's really just kind of what an investor will pay for it.
You know what's crazy about it? I always found out that the best valuation of your business is the business that you can evaluate this based on a business that haven't started receiving revenue yet,
Yeah.
because it's all assumptions, right?
Right.
So I can kind of just throw it out there that my business is worth 1.5 million because of XYZ. I don't have anything that you can measure or debunk my statement with other than the agreed scenario. But once you start making revenue, and let's say you in year 2, you can't just pull up out the sky what that business is valued at, because
Yeah, there are databases. Once you start to make revenue, there are databases out there for what should your business be worth at the multipliers that you're talking about. Yeah, so in a software industry, if you're doing 5 million in annual recurring revenue, you should be able to command somewhere between a 5x and 10x on top line revenue as a valuation. Still comes down to whether or not an investor is going to pay for that. But there are some established. I think the University of New Hampshire, somebody's got a pretty good database on what those look like. So yeah, once you get enough revenue, it's based on revenue and multiples of revenue, or be EBITDA sometimes. But yeah, that's true.
And with that also, so once you get that your first investment, that kind of sets the bar for your valuation moving forward, correct?
Absolutely does. Yeah. From that point forward, you're measuring pre-money, post-money, and you're walking that along. So yeah, there's no doubt. Yeah.
I love that part. Can't y'all tell I love that part? I love the money talking part.
Amen, brother.
Yeah. Well, we exit strategy. You kind of touched on that a little bit. Exit strategy. Do you know that is kind of a bad word with some business owners? Exit. I like the fact that Eric told me a long time ago, and I really love this, and I always come back with this, that there is a revenue share model that you can actually work with investors on. But for a lot of people, you're thinking exit. You're thinking, when you say, what's your exit strategy? Oh, no, we're not selling. I'm giving this to my great grandson. It's going to stay in the business. But
Nothing
when
wrong
I
with that.
learned,
Just don't raise capital. Yeah. If you can't come up with an exit strategy in some way to repay your investors, then you're not going to be able to get investors. So you've got to have a credible strategy for how you're going to return capital to folks. Otherwise, it's not an investment. Okay. The other thing is, most companies, and I've seen companies say this before, listen, I'm going to run this company until someone offers me too much money for it, and then I'm going to take the deal. I'm okay with that. Okay
Mm.
with that. But if you tell me I'll never exit, I have no desire to exit, I'm not going to exit, then we either have to work on some kind of royalty deal like you're talking about, or we have to part ways, because I got to figure out how the money comes back. I work with, you know, 3 or 4 groups of investors behind me, and they're expecting me to vet these things and be a gatekeeper. And so that's one of the gate criteria. Do you have a credible strategy for returning capital?
Oh no, Eric, we might have to do a whole nother show on this particular thing because I need to get some feelings out, man. Because I'm thinking about from the investor side, I put my money in, and then I'm waiting for your exit
Yeah.
to go correctly in order for me to get my money out.
Yeah.
That's that. You want to talk about risk? That's a serious
Risky
risk there.
investment. Yeah, exactly. Yeah.
Man, that's like, that's like buying lunch and waiting 3 or 4 weeks for them to cook the food and then you gotta see if it tastes good, But at the end of the day, I commend all investors just for that mindset to have that level of comfort to where you will invest your money into a business and hope that in 3 years plus whatever that they do the right thing and we all win.
Yep. I completely totally understand. And let's not forget too, one of the bigger things here is team. If you're a solopreneur, as they call it, it's going to be tough to get capital. I mean, you've got to have a great team around you to give you credibility on how you're going to build this incredible company. And a lot of that also is when you talk about the plan. And this is really one of the things that I always look for is, can you give me metrics? If you can't measure something, you can't fix it. You can't manipulate it. But if you're going to take time and actually create, and I want to see these in a business plan, metrics around your sales, around your customer service, whatever, product improvement, anything you can create those KPIs on, that gives instant credibility to an investor that A, you know how to run a business, and B, you've got a great strategy for how you're going to track success
Mm.
and be able to communicate that.
People, y'all are hearing it. I'm almost jealous because I know if you listen to this correctly, you might skip a whole module in the Investor Readiness Program. And I'm daring you not to cheat because we can see.
No, there's a
But
lot,
anyway,
there's a lot more in there. Trust me.
see,
We're just scratching the surface. Anyway.
we're coming up on the last couple of minutes, but we do have at least 2 good bullet points here because we're talking about your ask, and we was talking about that a little bit earlier, with the financial projections, the exit strategies and thing. But your ask, how do I know what to ask? And I know I'm not
Yeah.
supposed to be asking questions, but these are just so good. How do I know what to ask for?
Yeah. Well, you're asking for hard-earned money. You're asking for an investor to take money out of some other place that's working and go to work for you. And so that's your ask. And then, of course, the other flip side of that is, why should I trust you? So, yes, I'm asking you to part with hard-earned money. I'm asking you to trust me, and I've got to give you some credible reasons why you should trust me. Okay, I've got experience. I've got unique knowledge, unique network or intellectual property. There's some reason that you need to trust me, and that's kind of the last piece of the business plan. And I don't think anybody deals with that. And it's bigger than team. It's literally about sort of a trust statement. Why should you trust me with your money?
Mm.
And I don't see that often, but
That's
it
big.
builds credibility immediately.
Hey, Eric, as always, it's always a pleasure jumping on with you, just chopping it up. And I tried, ladies and gentlemen, I tried not to ask so many questions. I actually
No,
told him
no.
before the camera came on that I was going to have a conversation, but it's just so good. So I just hope that you really enjoyed this segment today of the Investor Readiness Podcast, and we will return. We at least what, Eric, have one up a week. Can we
Yeah,
can
that's
we
our goal.
can we throw that?
Yeah, that's our goal.
So, but you got to subscribe so you don't miss it. So at the end of the day, if we do it, I need for y'all to subscribe and let us know that you wanted more of this content. Well, my friend, it's been beautiful. I'm not gonna hold you long because we can sit here and talk about this all day because there's so many rabbit holes. But we'll cover some more stuff on the next time. And for those of you that may have questions or whatever the case may be, and want us to talk about it, actually go to the description box. There will be a link there for you to actually click on and submit your questions, and we'll talk about it and we'll let you know when we do. So other than that, it's been a pleasure. We'll see y'all later on the next go round.
See you next week.
Let us know how you enjoyed the show by giving us a like. And don't forget to subscribe to not miss the next episode. Got a question you would like for us to answer? Email us at info@getinvestorready.com. Thanks for watching.